Here at Longin's Capital, we've spent over a decade building a strong track record with our full suite of services and high performing funds. Now we're setting our sights on something even bigger, an IPO in November 2027. It's been a long time coming, and we are ready for the journey. Join us in our next big step. Visit our website to learn more.
Hi, I'm Peter Lundgren, founding CEO at Lundgren's Capital.
And I'm Mel Lopez, Chief Economist for ASEAN.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgren's Investor Insights. Join us as we dissect the biggest and most interesting news on economies, financial markets, and central banks globally. Welcome to the show. Hi Mel, how are you today and how's your week been so far?
Hi, Peter. It's been a very eventful week. A lot of the major events across economies that we've been closely watching for the whole year have culminated today. So, of course, the Fed, which we'll pick up later. Here at home, our own Philippine Central Bank also decided to cut rates. So, a pretty exciting day, Peter. How about you?
Yeah, also a lot of excitement, of course, about the market as always. You mentioned year-end, a lot of good investor conversations, also sort of looking into the next year, of course, see how to create more wealth. That is part of our everyday business, and we are very very happy, of course, to contribute to that part of life. Yeah. So yeah, very good week and pretty interesting, I would say. Decades ago, December was completely dead.
Mm.
Nothing happened almost whole December. But this has changed a lot. Obviously, basically, it's good. So we're fine. Doing a lot of business as usual, and of course, there's sort of end of year stuff as well on top. But that is a part of our work life as well. Yeah.
Yeah.
So let's jump into to the ocean of all these interesting things that we see in the financial markets, and as every week we have picked some topics that we think are interesting. It's interesting to dive into further actually, and it could mean something for the markets, and then of course also for investors. And again, it's topics that we pay attention to
Mhm.
in the mosaic of having a forecast and a trust in the financial market. These are all components that we use in our also professional daily life. So
Mhm.
yeah, we will start in Vietnam this time, and then move on to the Eurozone and see what's is there something cooking there. And of course, Fed, the U.S. Central Bank, is interesting again. We have a name check this time, and as we are looking into 2026, we will elaborate a bit on the greenback, also the U.S. dollar. And of course, we always end up rounding up with the sunshine outlook. Is there still sunshine in the financial markets? So, uh, Mel, let's have a look at the Vietnamese stock market, and we should say Vietnam is truly an emerging market. Uh, it is not the biggest in size in absolute terms, but really is on the radar screen. Yeah.
Right, Peter. So actually, when we do our usual China and ASEAN quarterly, where we focus on Southeast Asian markets, we really just usually lump Vietnam with the rest of the Southeast Asian region, given the relatively small size of the economy. But that is not to say that it is far from exciting or
Mhm.
far from rapidly growing, because that's really been the story in Vietnam this year. The Vietnam Stock Exchange or index is actually the strongest, one of the strongest performing markets this 2025. When we look at the MSCI Vietnam Index, it's up 60% year to date. So wow. If you entered the Vietnam Stock Exchange last year, you would be a very happy person this Christmas. Just to compare that number, the MSCI China Index is up 32%. The whole emerging market index is also up 32%, while the world index just about 21%. Also still very strong, but really,
Mm,
really impressive numbers coming out of Vietnam. And the unique thing about that market, Peter, is while like countries like the US or China is largely IT or AI driven in terms
mm,
of growth and valuations, in Vietnam, it's real estate and financials. So IT just comes in third. And it's
mm,
really a story of a very strong domestic retail investment activity. So that's very sustainable. We see, like the rest of Southeast Asia, we see Vietnamese assets as undervalued, still very cheap, but
mm,
very promising in terms of growth. And yeah, clearly the returns are very strong this year.
mm,
People are increasingly seeing Vietnam as a strong alternative to those moving away from the US or reducing their exposures to to developed markets towards emerging markets. And
mm,
very recently, the FTSE has announced that it is set to upgrade Vietnam's stock exchange classification to secondary emerging. So that puts it on the level of China, the Philippines,
yeah,
and India. So that's really a strong, strong performance and a quick response to this year's progress. And that's gonna kick in later in 2026.
mm,
Yeah, and it's really been a story of how Vietnam is opening up decisively to foreign investment, foreign equity. And yeah, the payoff is very rapid and clear. So if other emerging markets will take a lesson from Vietnam's growth
mm,
stock market story, it's really that you need more foreign capital than less of it. They're
mm,
very much into embracing quick entry of foreign portfolio investments, and
mm,
hopefully that also translates into like more permanent long-term foreign investments into Vietnam. So very
yeah.
exciting story, an upbeat, Christmas treat for those looking for a new location for their wealth, so to speak, Peter.
Yeah, but it has been sort of a growth story for some time,
Mm-hmm.
with as a obviously growing attention, as you mentioned this year in the stock market. Yeah, we believe it will. There'll be more Vietnam next year. As
Mm-hmm.
mentioned, the economy as such is not the biggest in the world. Let's put
Yeah.
it this way. So it also means in terms of allocation for an international investor, it's always interesting to find these extraordinary stories. Of course it is. And it's worth to consider to a bit more sort of tradable, or where you say you have some midterm bets. Vietnam is still interesting to look into. It would, of course, not take up a lot of space in the portfolio, but for these additional trades or directional trades that might be in a stock portfolio,
Mm-hmm.
this is still worth to look into. Yeah. And the important is also we do not expect the economy to either explode or implode because this when we see these kinds of movements in emerging stock markets, a lot of things can happen, and that is seen several times. That all of a sudden, then everything turns simply too hot. If we should look into Vietnam, that we will also look a bit closer into, but it's so far there's no signs that the economy is getting too hot. Yeah. So this is interesting, and it will also be for 2026. Yeah, sure, sure. Um, let's take the jump to Europe, and we are normally
Pessimistic.
sort of, let's say, not that optimistic about the Eurozone and European outlook. Then we have put it in a nice way. But still, we note that the ECB, the European Central Bank, is about to increase the growth forecast, GDP growth forecast for the Eurozone for the second time this year, actually. And they raised the outlook in September, and now next week they are raising again. Currently, the outlook is like 1.2% in GDP growth. Is that a lot? No, the problem is it is not. And we should also see where it comes from. And we are talking about current GDP growth rates at 0.2% per quarter. Yeah.
Mm-hmm.
It is simply not to be extremely impressed about. Part of the upgrade, a positive post reaction on the U.S. tariffs. It was not as bad as expected, and it seems that many companies has learned to live with the situation. So growth is sort of the stop in growth, or the halt, or so say, we saw in the early part of the year. Also, where European companies they tried to front run it by importing as much as they could in Q1, and also basically importing as much as they could in Q1. That is sort of stabilizing after all a certain growth rate. But there is an interesting issue because it's obvious. Germany and France, they are really underperforming, as they are. It's hopeless what's going on, and we are seeing some other part in northern part of our Eurozone is not impressive, but we are seeing some progress in the southern part of Europe. And that is typical where we said, okay, we simply do not advise investors to invest in these areas. And that has not changed. But we have seen S&P upgrade Italy. We have seen a lot of progress in a country like Greece, again,
Mm-hmm.
a small country. And Spain is sort of holding up, but that's where we very critically say is because they have so many tourists, and the flow of tourists is simply growing. And it's okay, as a growth is growth and work is work. We respect that. But it's sort of a future-oriented growth plan. No, it's not. This kind of tourism that Spain is attracting is in competition with, let's say, Vietnam or any other sort of sunshine destination, where we see what is
Right.
growing is a need for unskilled labor force, and so it's not a sustainable uh,
Growth. Yeah.
growth plan for an advanced economy. So we are not impressed about it, but still, is the eurozone flipping? It's a theme that we consider in an article in the coming global economic outlook or magazine we have probably on the way before Christmas as well.
A little
So,
gift for our subscribers, Peter.
but it's interesting. As there's some things happening. A bit is moving in the eurozone, and of course we have very close interest in that because it is
Yeah.
after all as a big investment destination for the majority of our investment clients.
Right.
So that is yeah. That's going on in the eurozone, and that's what the ECB is preparing. Of course, we should know that particularly European central banks they like to publish a good story about Europe, so they are biased.
Yes. I think what's helping them, Peter, is at least inflation is low and stable, unlike for example, in the US, where it's still very much a
Yes.
problem for their central bank. So that's something good going on also for the Europe or Euro area part of the world, Peter.
Yeah, it is actually yeah pretty okay. So let's see if that even could lead to a few positive tones. We'll see in our article.
Yes.
Otherwise, let's jump on to the announced name check at the U.S. Central Bank, Fed. And
Yes,
the
Peter.
name check, Mel, is of course what we it seems to be the candidate as the next head of the central bank.
Right. So Jerome Powell is down to his after yesterday rather, he is down to his last three meetings until May as chair
Mhm.
of the Fed. Of course, a very powerful position. And as far as official communications go, the White House is in the process of final interviews with its five candidates. So two of them are sitting Fed members. About another two are from the academe or private practice, and then of course we see as an emerging expected front runner, or actually expected choice by the by Wall Street, is current National Economic Council chief Kevin Hassett. So
Mm.
this is kind of expected if indeed he is the chosen one, because that's what Trump did with the most recent vacancy at the Fed. He chose one of his own men, so that's Stephen
Mm.
Miran, and he's also serving until early next year for to fill an unexpired term. And the concern here is really Of course, we know that the Fed voted to cut rates by 25 basis points again yesterday, so that's aligned with market expectations. But if we look at the pattern of Miran, so Trump is very vocally against the the strategy of Powell to,
Mm.
keep it slow, wait and see about how the economy turns out. He really wants rate cuts fast.
Yeah.
And that has been raising concerns about the Fed's independence. And here we saw that Miran has been consistently voting for a 50 basis point cut when everyone else or a majority of his colleagues are taking a bit more caution into that because as we
Mm.
know the job market is really a problem for the Fed alongside sticky inflation, which is
Mm.
really kind of in conflict with each other right now, so it's a concern. And if this pattern holds, the expectation is if Hassett is chosen, he would pretty much vote the same way. Of course,
Mm.
there will be the rest of the Fed members will still be incumbents. So that is probably a counterweight to how he will vote. But of course, the pronouncements coming from a future Fed chair would be very important to the market and could sway market sentiment very quickly. That's why we're closely watching this. Coming from Powell yesterday, the signal for a future rate cut isn't as decisive as well. So we know
Mm.
that the Fed is really about almost data blind right now. That's why I guess that's where the hesitation really comes from.
Mm.
And yeah, they're trying to tread that line not to piss off Trump that much, even if they shouldn't really be their concern. Yeah, so that's really a lot of pressure, I guess, and excitement as far as the US Central Bank is concerned.
It is. It is, as of course, a very interesting period when we are talking about getting a new head
Mhm.
for the U.S. Central Bank elected. That's yeah, it's one of the biggest position in the financial market, so to say, at all. So that is heavy interesting. It is usual that it is basically the White House or the
Mhm.
president who's behind the final decision. That is, we should say this is not a particular Trump sort of
Right.
idea. That is it is always the case. Yeah. So there's no doubt there will be a new head that is very much pro a pragmatic interest rate policy. Let's put it this way. That's up to
Okay.
follow Trump's wish about as low interest rates as possible. Yeah. So yeah, this will be an interesting period, and
Mhm.
it leads us directly to the last sort of topic today, a bit elaboration about the outlook for the greenback in 2026. The greenback, the nickname for the US dollar, yeah, is maybe interesting again because it was actually what took many investors by surprise this year. We saw
Right.
the drop in the US dollar, in particular from during the period from, let's say, sort of February, March until
April.
July,
Yeah.
where it moved pretty fast, sort of in lost, let's say, 10%. Yeah. And since
Mhm.
then has been trading in a very narrow trade range. Um, and the key is if it simply just continues to trade about, let's say, plus minus 2.5% of where we are now, or could the dollar take another move in 2026? And we have a primary scenario where that actually will be the case. There will be more uncertainty about the U.S. finances, so to say, as the government finances, because we've talked about it. Trump is very close to be caught in a trap.
Yes.
His popularity in all fields and in all areas, wherever we're looking, is at a very low point. And what everything he promised to the households in the election campaign is simply not fulfilled. People are disappointed, and he would need to do something ahead of the midterm elections. The easy way is to
More
open up
so.
for how to say it, yeah, somehow economic spending, yeah, that
Mm-hmm.
is flushed directly to the middle class households voters. We see now he is supporting the agricultural sector because
Yes.
they are suffering from his policy as well. But the agricultural sector is not so dominant, yeah, in terms of economic size.
Right.
But when we talk about lifting the middle class and make them happy again, that is an it will be economic so heavy it can't be done. Yeah. But just a part of the way there would generate more data about the U.S. government debt, public debt, that is too high already, and that will be lead to more nervousness about U.S. and the economic future for U.S. in the coming year. Public debt, government debt is not in favor among investors right now. It is seen as negative. So we see that the fundamentals could very easily speak against the US dollar. Too much nervousness about the economic outlook for the state of US. Then the key is could Trump see an interest in letting the US dollar slide? It's twofold, yeah. Because naturally it will help the industry, US export, but that
Yes.
doesn't really make out a big part of the US economy. And on the other side, it would make import more expensive and again hurt the consumers and the middle class households. But it could easily be that there could be some speculation that about just a speculation about that he might, or the U.S. government, that and there we should remember that the U.S. central bank's responsibility is the monetary policy, that is the
Right.
interest rate. The currency policy, that is actually always, of course, that is always the responsibility of the current government. If something needed to be carried out in the market, it could be intervention, then that is handled by the US or by the central bank in any country. But sort of the decisions and the currency policy, that is actually a political thing. It's also why it is so important every time US has a new finance minister. The new finance minister is hunted by all journalists to
Yes.
say that the minister supports a strong dollar currency. Now and then, if we look back in history, as a history in the sort of
Mm-hmm.
newer, let's say 20 to 40 years, it has happened that a US finance minister is sort of signalizing some doubt about the strong US dollar policy. And immediately we see a drop in the US dollar. This kind of situation, we speculate that belongs to our primary scenario in 2026. So another 10% drop in the US dollar next year is a possibility. And that is, it's not so we say that we are completely convinced, but it is our primary scenario. And a
Look.
part of it will be nervousness about US simply budget household. Maybe also general uncertainty about US economy.
Yeah.
And then there could be added by the spice that we will see some political comments about, yeah, it might not hurt US if the dollar was a bit cheaper, yeah.
Right.
That is very controversial because that hurts European export, yeah, on the other side to US. And European politicians, they would be furious. But US, as we have seen, the US government has no respect for European politicians. So US will just do what they want. So this is what we see right now when we are talking about into the US dollar and exact as a fantastic interesting together with what is going on at the Fed and so yeah. So yeah, that was a bit sort of outlook for next year. What about sort of Asian currencies? They do have a correlation to the US dollar, but if it happens that US is sort of trying to push the US dollar a bit lower, and we still expect Asia governments and economies to perform
Mm-hmm.
strongly, Could there be sort of a decoupling there? Or?
I think, Peter, increasingly, some of it we already saw this year is that the US dollar is losing its supposedly stronghold appeal as a safe haven currency.
Mm,
The yuan, the Chinese yuan, for example, they've been really trying to position it as a preferred as alternative to the dollar, and with how China has performed against the tariffs, and even in the middle of its own recovery from the
mm,
property sector problem from 2 years ago, they are showing more resilience, and therefore more growth, faster growth that's becoming more attractive. And of course, with a very strong export sector as well, the
mm,
currency is, of course, performing better at the time when they are able to send their goods elsewhere or sell more elsewhere.
mm,
So currencies, yeah, there are a lot of the smaller or emerging economies are very much responsive to how the dollar performs. But the bigger
yeah,
ones, like maybe China, India, and Japan, are
mm,
able to squeeze some gains in while the
mm.
dollar is sliding, Peter.
Yeah, that would be interesting. Good, really interesting themes and outlook for next year.
Yes.
And yeah, let's jump to the sort of our weekly sunshine outlook.
I think, Peter, the sunshine prevails. It's been quite a year for financial
Mhm.
markets. That is putting it lightly, but we have noted that uncertainty will likely increase as towards U.S. markets
Yeah.
going into the next year. But we still do see good prospects, opportunities for investment. We have recommended that taking on risks should be well considered. But of course, that does not in any way mean that everyone should be pulling out or taking their time to like rechannel from one instrument to another. But we do see that it needs to be recalibrated. Take this opportunity to recalibrate rather. The outlook is brighter as far as emerging markets are concerned. We
Mm.
are particularly bullish towards China. Optimism prevails, Peter.
Yeah. As we remain, of course, aware of all the different clouds on the horizon that we are talking about now and then, but still we do see the upside stronger. It would be a wrong time to just to cut
Mm-hmm.
assets down with as a and go cash in the portfolio or whatever. We actually still prefer to overweight risk.
Mm-hmm.
A bit more well considered, as you mentioned, how to play the market, and as you also mentioned, yes, we see higher volatility. We see a more difficult market next year. It's a tough job to find and define the right investments next year. But there'll be a lot of opportunities, and finding these we have as we've tried these kind of markets before, and this is what we are paid for, and that's very easy. But if it will be a bit more challenged, it might be even a bit more exciting, so to say as well. So this is what we see. Thank you so much, first of all, to all the listeners. It's a pleasure every week. Thank you to you, Mel. It's so good to have you here and share your insight. And yeah, again, also thank you from my side. Always a pleasure to sharing thoughts. Thank you. See you
Thank you,
next week.
Peter. And thank you to our listeners, our subscribers. And we have one more episode to go. So stay
Yep.
tuned next week.
Thanks for tuning in. We'll be on the lookout for market developments worth watching. Catch the next episode of Sound Economies, Mel and Peter on the global financial markets, available on our website and on Spotify. For expert insights on the go, download the Long Green's Investor Insights app for free. Risk-loving investors will find opportunities in our high-quality alternative investment funds, especially our multi-awarded mutual China fund. For more, visit longgreenscapital.com.